I have to say that I am a proponent of using other software and then coupling it with multiple other softwares. That was one of the many aspects of Loan Factory that attracted me. So being that I used to use Mortgage Coach for all these years and I'm not promoting it, I want to not use it anymore. Now, Thwan has never used any other system or feature to provide rate quotes, to go over closing costs and settlement charges with a consumer. And the fact that he's done it 6,600 times in a year, it's time for me to learn something new and start wearing a new outfit. So Thwan, if you could kick this off with that, and then after that, what I'd like to do is if we can kind of just put an order together for everybody that's on the call here. So I'd like Thwan to walk us through that. And if you're not pricing things out in the system the way he's going to show us, offering quotes to clients the way he's going to share with us, I would encourage you to try and adopt this moving forward because I'm definitely going to do it. The second piece is I'd like to hear some of the success stories amongst everybody on the call over the last week. And then in addition to that is if there's anything that you've run into that you're struggling with or questions on how to approach, we got a couple really, really incredible people here alongside of Thwan. Zach can answer some of these questions here. So please, Thwan, first and foremost, thank you for being with us here this Friday. Zach,
Thank you.
and everybody else that's on the call, please take this away, man. Someone comes into the website, they call you up on the phone, you're going to provide a quote. Show me how to do it so I can do it.
So let me repeat. This is gonna be our weekly cell call. Okay. So every week we get together, we learn from each other. We share our story. Hey, I failed this loan. The borrower left me because I don't know why. Just share your story. Any win, any lose, share so that we can learn. We can share feedback. We can help each other. So it's very important. Weekly cell call. So this week I can start out by show you how I deal with the clients, like Patrick asked me, and any of you can ask me any scenario that you encounter. You say, Tuan, what would you do in this case? Or just anything. Okay, we want win and lose everything. Any question at the end, we will go over how we can plan or prepare to launch the $1,000 lowest rate guarantee. Okay, so I will start first. Like Patrick said, I don't use any other software because when you deal with other software, it's a separate system and it's hard to work when you use the different system. You have to move things over there. You have to learn how to do it. It costs you money and all that. So my philosophy, we make everything really simple and powerful and free. So if you are using any software, any feature that you like, and you want to have it at Loan Factory, share with us. Let me know. We will try our best to implement it so that we can have that software. Okay. So for me, when I deal with my client, it is extremely difficult, extremely important to gain the trust. Once they trust you, they will do everything. They will follow you. They will stick with you. You don't have to worry. And the whole transaction would be pleasant. So you need to build a trust. And when I build a trust, basically we make everything transparent. First, everything transparent. We use the website. In my opinion, this is how I do it. I have a website. When the client call me, he say, hey, I want to do a purchase. I want a quote. What is the rate I can get, right? So what happened is let me share the screen.
Yeah, please. And Thwan, it sounds like you're going in this direction. I just want to confirm for everybody. So like as of right now, I'm a client that's calling you to purchase a new home. This is exactly what you're going to do while you're talking to me on the phone.
Yeah.
Awesome.
So you can say, oh, Tuan, I want to buy a house, 700,000 and I can down 20%. So imagine you're asking me right now, and I will answer, okay, you 700,000, 560 is the loan amount because you got 20%. And what is your zip code? We have to ask for that. Let's say I use this, right? I ask for what is your credit score? Say 720. I keep it default here, but you can change it. Normally, I can finish this up. Is it a single family owner occupied? You live in the house, right? You don't have to ask a conventional loan. And then you can just click here. And then it's so important to find out if they qualify for Home Ready, Home Possible, or LLPA waiver. So one piece of information that we need is the income. And depending on the income, the answer would be different. So let's say in San Jose, California, if their income is 199,000 or less, they can waive all of the LLPA. which is excellent. The income 199 is very high. So I check the rate, and while it's running, to burn their time, instead of make them wait and stay silent, I keep asking them, "Oh, are you looking to buy? Where is it? Do you have a realtor yet? Did you offer? Like how long have you been looking? Is it difficult for you? Or you can chat. You can talk about, did you talk to any other lender yet?" It's very important to find out where they are with the process. Anyone help you and answer your question? First, I ask them, are you first-time buyer? That is critical. If they are first-time buyer, then I will ask the follow-up question. Oh, do you understand the process? Did anyone explain to you? Then you will find out that they talk to another lender yet. If they don't tell you, if they don't give you clue, you can keep asking, oh, did anyone explain to you the process? Do you know anything about rate and cost and point? You're asking a simple question to show that you care for them. You try to help them. And depend on their answer, if they are shopping around or not. If they have someone already or not. And then you can steer the conversation in your way. It's important to detect where they are with the process. What are their knowledge? Sometimes they know everything already, and you should not keep asking, questions that wasting everyone's time. So I always detect their knowledge, their position, their level, everything. I detect that by asking one question after another. And this is to require experience, but I always detect and then ask the question that I will impress them, because I know exactly what they want in their head. Because one question they answered, I know what to ask the next question. So assume that they never shop around their first time, then feel free to explain the whole process, help them understand the process, and let them feel comfortable. So I would say, wow, rate have been dropping. A month ago, it's almost 7%. Now, look at this, 5.25. It's amazing. I know that nowhere, no other company, no other loan officer can offer this, because this is an LLPA waiver. So if I quote this rate, I'm going to win for sure. So I know my competitor. I know where I am when I offer them. And so I will quote them, oh, rate 30-year fixed right now is 5.25. That's only $129 point. And it's not relevant. It's so small. And the points will go up or down every day, just like stock. Everything go up and down every day. And you cannot get the rate you want until you lock the rate. You kind of explain. If they have the experience, they know, they understand, you don't have to spend so much time on it. But if they don't understand, make sure you explain, because you don't want them to come back the next day and say, hey, Tuan, why you told me yesterday there's no point and now $2,000 point? You lied to me. You didn't make it clear. So the mortgage is difficult to understand. You need to know your clients, where they are they understand the concept. The worst thing ever happen is losing their trust. Explain to them so that when rate go up, they're not mad at you. So I told them, oh, this is rate today. Tomorrow, rate can get better or worse. That $129 can disappear, or you can even get credit. But if rate get worse, you have to pay extra in point. And depend on if they are where they are with the process. If they are just asking for pre-approval, they say, oh yeah, by the time you buy the house 2 months from now, rate might change. It could be 6%, could be 4%. Explain to them so that they understand. Or if they are in contract, then the conversation change completely. Oh, you're in contract, right? How many days left you have? You know that you need to proceed quickly, right? You need to lock the rate soon too, because everything you're racing against the clock. You don't have time. So let them know. And then let's say, oh, did you shop around yet? Did you check the rate anywhere? What rate did they give you? Ask them up front. You challenge them. Okay. Because very likely that if they come to you without a pre-approval from you, you know that they shop around. You know that they have another offer. Then you should try to gauge your rate versus the other. Most of the time, sometimes 50% chance they will tell you, oh, the other person offer this rate, can you beat it? And then sometimes they don't want to tell you. They want to play game with you so that you have to offer them even better rate. So you have to detect and engage in the conversation. This is sell call. This is sell. You need to negotiate with them. Of course, you help them, but at the same time, they are trying to negotiate with you. So you have to negotiate too. So it's the experience that count. You need to detect that. But at the same time, if you are too tough, they will walk away. So to answer the question from Patrick, see the rate is super low, right? But normally I give them a few options. In this case, no brainer that we choose Rocket. There are two big decisions that you need to make. First, what lender? Second, what rate to quote the borrower, right? So the biggest decision is look at this, the whole picture here, right? Should I offer 5.625 or 5.75 or 5.875? Okay. This is very important. Everyone needs to understand this. If I offer this, it's par. But I offer this, the ball will get back 2,800. I offer this, one level up, one level down, the borrower will pay 1,400. So by looking at this, it's cheap to get 5.625, right? It's only 1,400. You get better, 1/8 better. But then when you raise the rate by 1/8, you get 2,800. So it depends. If the borrower want a lot of credit back to help with closing costs, then I would choose this. There's a lot of credit. And I also, if you already determined that Rocket should be the lender, you can do this so that you won't be confused with so many lenders. So now it's easy to compare. Moving 5.875 to 5.75 and 5.625. The difference here, it costs so much to buy this rate. Almost $2,000 to lower the rate 1/8, right? And here's also almost 2,000. So either way, there's no benefit. In this case, I would recommend 5.75. But if this number is 1,000, then I would advise the borrower to go with 5.625. And this happened a lot with investment property. For example, let me change it to investment property. You can see that. But here, obviously, you see the pricing is even, right? It costs about $2,000 to change the rate by 1/8. Let's try with investment. Investment, this is good. Investment, 2 units. Oh, this is $1. It's not 2 units. Okay. So investment. You see that we cannot do no point. Why is it? We purchase. That's because 80% LTV. Rate is real terrible. So we have to do 25% down. So most of the investment property purchase, I always advise client to go with 25% down. Now we can see different rate here. And the difference is around 1,200 here. This is 1,500. It's cheaper to buy down. And then from this to this, well, let's see. I'm sorry. From here to here is less than 1,000. So it's cheaper. So getting cheaper and cheaper when you buy down. But then from here to here, it's 1,500. It's too expensive. So if the borrower wants to buy down the rate, 6.99 is the best. This is where I recommend them. Moving up the rate, one level, you have to pay 1,500. But move down the rate 2 level, you pay like 2,200. So it's cheap to buy down. And you can do this. You can compare the rate, 7.375 or 6.99 or 7.25. You will compare that this rate, the borrower will get a credit. They choose higher rate. This rate is par. 7.25 is the par, no point. They want higher rate, they get credit back. They want lower rate, they have to pay. And compare among the three, this option will save them $49,000 over 30 year fix. And what they pay upfront is the difference of the two here. So it's about 3,500. So a smart investor would want to buy down because for an investment property, it is extremely difficult to refinance. The closing cost is high. The rate is high. So, and then investing in real estate, normally long-term. People keep it for a long time. So if you're good, you recommend your borrower to go with this option, 6.99. Pay a little bit of points, you save so much money. And you can click a button to email the borrower, enter their name and their email address and send it out. And while you're talking to them, normally what I do is I ask for the email address up front. Hey, Can you give me your email address? I'll send you all the number that we have been talking about. And when you talk about, when you discuss with the borrower with a lot of numbers like this, it's very confusing. So before I even talk about this, I ask them, hey, give me your email address. I will email you the comparison. I will analyze the numbers and explain to you. It's better that way. Otherwise, the consumer, they will have no idea what's going on because there's too many numbers and they have to write it down. It's hard for them to remember and they don't trust you. But if I can get the phone number, I click here or here, I send it to them. 5 seconds later, I ask them, hey, check your email, open it up, and then we can go over the number together. And then at the same time, I create a lead so that I can follow up tomorrow or next day so that I won't forget. So this is a lot more powerful than the software out there because the software out there, many reasons, right? The software out there costs you money. It's not accurate number. You are guessing. It's not a real pricing for this particular client. It's all guessing. All the number are guessing, and it changes anytime. And it's not applicable to the conversation. It has nothing to do with the code that you provide to the borrower. So not only you get things done so quick, easy, free, you gain the trust from the consumer, and even better than that, on that email, there's a button for them to come back tomorrow to check the rate. They can click on the button on the email that you send it to them. Here. You see the button here, see my rate, an online application. They can click on that to fill out the application. So normally I seal the sale. I told them, how do you, compare to other, I try to seal it. If they're shopping around, I ask them up front, is my rate better? Are you going to apply? And I ask them up front, why not, right? Because you don't have time. If you wait, that's fine. Shop around, that's fine. But if you decided, click on the button here, online application. And let's say you want to think about it, you want to monitor the rate, that's fine. Tomorrow or after, every morning, click on the button, see my rate. You can see the rate. You don't have to call me. You monitor the rate for me. But the point is we do business transparently. Let them see all our pricing. We have nothing to hide. They can check it anytime. They can verify that. And because we show the rate to the public, they know that we don't lie it to them. We don't play game with that. Wherever you see, whatever I have, I offer to you. So let me share one more thing that you can do. More than here, you can see that we compare the three options of the same 30-year fix, right? Sometimes the borrower asks, should I go with 20 years or 15 years? So what I do is I click 30 year. I pick the par rate for 30 year, right? Then I go to 20 years. I will quote them for 20 years. I say, oh, this is investment, that's why. But assume that I pick this. And then I can compare the two. See now 20 year and 30 year. I go to the number and they say $321,000. This is how powerful it is to, some consumer, they have high income. They want to save money. So you can persuade them to go with 20-year fix or 15-year fix. And as soon as they see how much they save here, they will go with 20 years and they love you. They will stick with you because you are a professional. You provide great advice to them. You save a lot of money. So, and in many cases for refinance, let's say their rate, they have 27 years and 3 months left, and the rate is 8%. They are debating whether they should refinance or not. And sometimes you encounter a pushback from the consumer. They say, hey, why would I refinance? I already paid almost 3 years. If I refinance again, it's another 30 years. I don't like it. So first, you give them option. You can do 25 years. And by the way, some of you might not aware, with Rocket, we can do loan in any term. 27 year, we can do it so that we can match their term. We can do 26 year, 24 year. We can do loan for 17 years. It's all possible. So to address their concern, we can match the term. We can lower the rate and help them. And we always can compare to see the saving. Okay? And then you can always email to them. So far, anyone have any question for me?
Yeah, I think Joe had one before.
Yeah, hi Joe.
Yeah, I saw the answer to it. I was wondering if the pricing you were giving had the waived underwriting fee with loan level adjusters for the underwriting, but then I saw the box was not clicked on the side because I was just kind of going by
Yes.
with our pricing engine, comparing pricing and stuff.
Yeah, we have that option to check for the borrower. And I do believe that our pricing engine is the best because it's so easy to use and it can even detect home ready, home possible, and LLPA waiver. Hey, Jack.
I would say what you were doing during the rate where the rates were so low, that worked out perfectly. I would recommend for people that are doing purchase business, I would most likely, like Tuan said, I will take him do a buyer's consultation. Talk to them, tell them from what happens from A to Z, because they're most likely their realtor hasn't told them, or they've probably given them a snip of what's going to happen. And the longer you have the clients on the phone or Zoom meeting, the better they're going to trust you, because now you get more information from them and you're providing them a value information that no other loan officer is going to do. So the reason majority of my buyers that go with me are basically, I try to implement a buyer's consultation on every single one of them. And when you're talking to the buyers, like, look, it's not just collecting your documentations and getting you back the information as far as what the rate will be. Let me dive a little bit more deeper so I could see, in case we miss something during the application, I could fix it before it goes to the underwriter. So you want to basically, I always tell them, it's like going to the doctor. You go to the doctor's not going to know what is the cause of your sickness right away. You're going to go through a little bit of tests. There's going to be the nurse. It's going to be, checking your heart rate, your blood sugar, whatever it is. Then the doctor will come and, see you. It's the same thing as buying a house. There's no different. So I would highly recommend every single one of you guys do a buyer's consultation, because it's not so much about, it is about building rapport, but it's also avoids the buyer going with another lender.
Thank you, Jack. 100% agree. Basically, you want to be a good doctor. You want to be so good as a doctor. You want to be a good doctor. You don't want to be a bad doctor. So same thing. As a loan officer, you want to be a good loan officer so that you know their illness. You will give them a prescription. You give them advice that will fix the problem. So you push yourself to be so much better so that you can detect the problem. You can fix the problem. You can advise them. And like Jack said, you should spend enough time with them. Build a relationship. The first meeting like that is so important. Secure the deal so that they love you, they trust you. So it's important. And I'm sorry to say this, but many of us are not good enough. I have to say this. Many of us are not good enough and unwilling to get better. I myself still have to reevaluate myself. Even though whenever I lose a deal, I look back so hard, find out why we lose that deal. What did we do wrong? So that next time I do better. So I want all of you to learn from Jack, learn from me, that you can be so good. You have to improve your communication skill, improve your knowledge, your guideline, your experience. You have to be so good. You know that you are so confident that any client sit down with you or talk to you, you can win. You can secure the deal. You can win their trust. If you cannot reach that level, you still have a lot of room to learn and to improve. So I want all of you to keep learning, to improve. There's so much more to learn. And that's why we have this weekly meeting. We know that most of us do not have enough transactions. That means you don't have enough experience. We all need experience. And that's why here in this meeting, we share the experience. Hey, I have this loan and the borrower is this and this, and I spend time on this and this. Share the experience and the result so that we all can learn. So I can share one experience. This morning, one client called me. Actually, I deal with the mom. Most Vietnamese mom, dad love me because I am very good with the Vietnamese community. They all love me. And they tell their kid to do loan with me. But kid here, they grew up here. They think that, oh, my mom and dad are old fashioned. They work in the Vietnamese, the old traditional way. And of course, the loan officer that work with my mom and dad are not good enough. So I'm not going to work with Ton because he's not going to be good. I know that. So kid think like that. Of course, that's true, right? So I deal with the mom. I said that, okay, I have the best deal for you. No one can beat me. I'm the number one officer. I do all that. So, but then the kid is the one that makes decision, right? So I persuade her to fill out the application with any rate, any pricing. The kid, of course, don't believe his mom, go out and shop around. And he applied, of course, the mom told him to apply, but then he refused to e-sign. And this morning, the mom called me and say, hey, can you lower your origination fee? You make too much. The mom is a realtor. You make too much, over $5,000. I'm a realtor. I do communication. I have a lot of clients. I can refer more to you. So the mom is try to negotiate. And one thing I learned is my staff did not escalate to me. So I told my staff, I got mad at them this morning because I have an escalation system. If the borrower do not e-sign, that means they shop around. And as soon as they shop around, we are in an emergency mode that it needs to be solved right away. And I already give them the time frame of 2 hours to escalate to me. And they did not. So I got mad at them. So this is to show you how important it is to have an escalation system. You too, if you cannot solve a situation, feel free to ask around, ask me. I know one of the good loan officer here escalated me 2 times so that I can help her solve the problem. So that's the good thing that you work with all of us together. We can help each other. We have a team to help you. You can escalate to them or you can escalate to me if they cannot help you. So eventually I talked to her. I told her origination fee is just a small thing. It's about the rate. It's about lender credit and everything else. I make more. I make 5,000. Doesn't mean that my rate is higher. I make 5,000, but my rate is lower, and your son will get credit too. So if you want to be fair, if you want to compare, you want me to give you the best rate, give me the other loan officer LE. I will look at it. I will tell you why our deal is better. So that solved 80% of the concern. At the end, I give her a little bit of credit, of course. You have to make sure she's happy because she's an important person. She deals with communication with the community, and she's a realtor. So I give her a special deal to win her. And I know that in the future, she will refer more clients to me. But I give her a little credit because of that, but not because they are shopping around and they have to lower my count. But at the end, you need to look at the whole picture. I tell them that the rate, the cost, the origination fee is a small factor. I told her, look at this. The bottom line is my rate would be better. And I know that because 3 reasons. Always tell them this, 3 reasons. I shop around all the lenders for you. I have the technology. I have the pricing engine. I can shop around quickly. The other company, they don't shop around. They submit to one lender. And you don't shop around, always give you better pricing. Secondly, I said we close a lot of transactions. Loan Factory, we close a lot. And we push the lender to give us better rate. So let's say if we both work with the same lender, we have better rate. And thirdly, we already have low compensation. So because of the 3 reasons, there's no way anyone can beat our rate and challenge the borrower. Hey, give me your LE. If you shop around already, that's fine. We want you to shop around. You have to be strong and challenge them. That way, if they're even thinking about shop around, they will forget it. They don't have to shop around. So the key is to be upfront, be transparent, and explain to them so that you can gain the trust and they go with you. So that is one example that I want to share with you. Any example or anything to share? Hey, Jack. Yeah. Hi,
So
Jack.
the way I explain to them is upfront is like the difference between me and I always put it out retail banks because that's the number one place they're gonna go shop. I always tell them the difference between a broker and a retail because I've actually worked with one of the biggest retail banks there was for mortgage, which is Wells Fargo, and there's no lie. I was there for 8 years. So I always tell them the difference is when you walk into a bank branch and you ask for pricing, they only could give you what they can offer. Then the difference between me and the retail bank is that I don't have a bank branch. You cannot walk into a bank branch just like Chase, Bank of America, Credit Union, whatever it is. I just put it out there, whoever they're banking with. So I tell them that pricing is better because I don't have to pay or the company doesn't have to pay all these leases. They don't have to pay the managements. They don't have to pay the workers. They don't have to pay the underwriters, the processors. So all of that fee gets added to the rate. It's a margin that they have to charge. That's why the rate is higher. I always tell them, look, go to your real local bank right now and ask them what their rate is and put me on the speakerphone right there on the spot, and I'll guarantee you my rate will be lower by a quarter or 0.375% better. That's a fact. Unless it's a jumbo loan, then of course I don't say that. You have to know what they're buying. You have to know what kind of client it is. But the idea is that you're telling them that I'm not scared of you walking to any retail bank and you're going to end up losing business because you already implemented in their head that, hey, this person is not scared. I could go to any retail bank, but they're not going to do it. They're not going to go to a retail bank because it's too much work, too much hassle. And you already ensure them that you're confident enough that if you were to go into a bank, that you could beat the rate. So it's just like you're playing mind games at that point. And I always tell them, the other thing is the comparison I do is like, I always tell them, when you go to a shopping mall, you go to a food court, look how many restaurants there are that you could pick and choose which food you want to eat. When you go to when you go to a restaurant, you could only eat what they're offering you. Similar to us, I'm a wholesale broker. I have all these other banks that are offering me rates and fees for your scenario, and we will pick and choose whichever is going to give you the best rate and best fees. Retail banks are just like the restaurant. You go into a restaurant, they're only going to serve you what they are cooking that day. But if you go to a food court, you could pick and choose. Hey, I want to eat pizza. I want to eat this. I want to eat that. So you have varieties of flavors to choose from. It's the same thing as me. I always use that analogy, and single one person that I've talked to, they actually gets embedded in their head that I am better than the retail bank.
Anybody have any questions about that or about what Thwan shared about the pricing?
Everyone understand how to use the software to compare the rate, right? Compare and then email to the borrower. Try to use it.
All right. Goitam, you have any questions? Let's see your hands up.
Yes. Well, my question is, we don't know by the time we give them a quote whether they pre-qualify or pre-approve. So isn't the pre-qualification should come before giving them a quote? That's the questions that I have. Seems to me, without knowing they will be pre-qualified, you're wasting their time and our time. That's was the concern that I have. The second is the fact that the system doesn't give below 720 score. Is that by, am I right? Meaning the choice that you have on the system is no credit, I need to go up? Oh, I see. Thank you. Zach answers that question. I was looking, I didn't see below 720.
To answer quickly, you're supposed to quote rate for them, even the first time you talk to them. Always give them an idea. This is the rate right now. This is the rate. This is the payment. Give them the information. It's important to know what is the payment if they buy the house. That answers your question, Gautam?
Well, I need to know about the client first before I commit to a rate, because that is a sensitive issue, as you said.
But then by engage them, every home buyer want to know the rate and the payment. So by using that in the conversation, you can engage the conversation, you address their concern, and that's how you get to know them.
I have a
That's
good way to put it.
Yeah.
I'm sorry. So if you want to get to know the clients, you ask them, so you would like to know the rate up front, or do you want to see if you qualify? Now, if the client says, no, I want to know your rate. Okay, great. Do you know your credit score? Do you know what your down payment is? So you ask them. Now, when you're quoting them the rate, say, this is based on what you're telling me. This is the rate for today. Now, once we move forward and get you pre-approved, and if your score doesn't match to what you're saying, then the rate will change. But at least, like Thwan says, you're giving them the rate that they're asking, because if you don't do it, they're going to call someone else and ask for the rate. But it's the way you present it, because what you're asking is, let's just say they say, oh, my credit is 740. Okay, great. This is the rate based on 740, 5% down, single family residence, $700,000 purchase price, da-da-da-da. Now, let's just say when they move forward with you, their credit score comes lower than 740. And they say, well, how come the rate is higher? Well, remember, on the phone, you told me your credit score was 740, and that was based on this score. Now, you could, then they won't question you as far as, you know, the rate again. That's what my experience is with my buyers. If my buyer wants to know right away, that means that they're shopping. So keep that in mind. If the buyer just wants to get a rate right away, most likely they're shopping around. So you want to give them the best possible rate there is. They're going to take your rate. They're going to call a couple other people. And if those people don't say any lower rate than you then they'll come back to you. I've experienced that with a handful of clients in the past. And right away, I knew they were shopping me. Because if they start asking you certain trigger words, like based on what credit score, this is what I'm buying. So they're a more like educated buyers that they're just shopping you.
Yeah, thank you. Just a follow up. When I'm a real estate broker. In the real estate brokerage, when we discuss with the client, I mainly tell them nominal rate is not the deciding factor. You need to look the APR, the annual principal rate, but because that incorporates that is what's costing them. So when they are talking about a rate, are you quoting them the rate without disregarding the closing cost?
Can I just touch on that really quick? Do you mind if I just want to interject on this? So when it comes to the APR, I would not suggest the client shops with APR because it has nothing to do, like the government can't account for lender credits. So if you say you have to look at the APR, you may be doing borrow paid financing, charging 5, they're getting a lender credit for 5, but the APR is based on the 5,000 and now you just lost the deal even though the cash to close was the same. So like APR, probably the worst mechanism that the government placed there because it's not calculating all and factoring all the fees across the board. I sell against that all day long, every day. So I would just tell you, don't do that. Number one. The second thing is what Thwan said, circling back to the beginning of your question, Thwan, you hit the nail on the head. It just has to do with experience. And the more people that you talk to, the better your question and how you navigate through quoting an interest rate is going to get. Because ultimately, at the end of the day, look at the incomes we have online now for these first-time homebuyer programs. If they make $200,000 a year, right, $16,000 a month, and we can qualify them up to almost like $6,900 a month, a monthly payment, they're not going to want to make that payment. So it has nothing to do with really what the interest rate is first. It's how much are you comfortable spending, right? Like that dialogue and like the experience that Thwan just talked about is so wildly important. But I'm a little sensitive when you say APR because APR does not factor in lender credits. So when you say to a client, if my APR, they may be you're factoring in mortgage insurance premiums that go into that, but like it's not the best thing to tell your consumer. You want to look at interest rate, monthly payment, and cash to close, not APR.
Yeah, I want to second Patrick. Do not ever deal with APR. It's misleading. Tell the consumer that too. It's very misleading. Never use APR because it's misleading. Tell them that. Because I can cheat. I can say my rate is 5.25% for 30-year fixed. APR. Without disclosing that the point going to be $15,000. So forget about APR. Even I would say 80%, 90% of the loan officer don't even understand about APR. How can consumer understand? So forget about APR. Okay, tell them that it's misleading. It's all come down to rate and point cost. It's all the whole thing like that. Okay, make it simple for them.
Agreed.
Okay, Bongo.
Hi, Tuấn. The reason I joined Loan Factory because I love your page, your website I don't see other company have it because I used to work we used to use like Loan Shifter before. And I noticed that on your price engine, you only do like 30 days lock. Do you anticipate to do like maybe 60, 90? Because sometimes we like price for like new builds and sometimes it's not 30 days,
Yeah, we can do that, but we try to make it simple. Because we know that Rocket give it 20 days free, so that's 50 days. And if you click on the lender name, when you price the rate, you click on the name, you can see how much it costs to lock 45 days or 60 days. You can add that by hand manually. I just want to keep everything simple for now. But if you click on the lender name, we are trying to provide all information, but there should be information to show you, if I want to lock 45 days, how much it get worse. It's just a little bit.
Okay, got it.
It's an additional adjustment. It's one more adjustment, and it's not much.
Okay, thank you.
Yeah, thank you, Bong. Joseph?
Yeah, so I noticed when you're pricing out your scenario, you had it clicked on borrower paid. And when you're low enough lender paid comp, a lot of times that doesn't come into play. What do you guys do in order to determine whether or not you're going to come out with borrower paid 1%, or if you have, because what I'm competing is I do a lot of VA, and I noticed that I'm usually 0.5% to a full percent lower than retail. So I can do 2% lender paid comp. At what point do you guys determine, okay, I'm going to flip this to borrower paid as opposed, because I think you take money off the table if you go straight out borrower paid every time. Do you understand what I'm asking?
Yeah. The rule is try to go lender pay. That's when you make the most. But always switch to borrow pay if you have to lower the rate on the deal. That's all. Keep it simple.
Got it.
How does that come in play with correspondent loans?
Correspondent is different animal. You cannot compare. There's no such thing as lender pay or borrow pay. Wherever you want to charge the borrower, charge it.
Correct, but how do we price it in the system? We put it as a borrower paid and
It-
price it that way?
No. Exactly.
Got
You
it.
put it as a borrow pay and charge whatever you want, knowing that that's what you make.
Got it. Thank you.
Yeah, thank you.
Cool. Anybody else have any questions about that, about the pricing?
I have a follow-up question on that one. And I need to make sure we are not allowed to do lender paid commission. Is that what Juan said?
No, you are allowed to use lender pay commission. But if the borrower doesn't like the rate and shop around and want lower rate, then you have to switch to borrow pay. And you have to lower your compensation so that the pricing get better and you can win.
So let me explain what borrower paid and lender paid, the differences are for those that might not know. Lender paid is basically a set compensation that gets settled of every quarter, if I'm right, or every a year with the lender. So if you're doing a lender paid, whatever rate is based on the lender paid, let's just say it's always going to be a little bit higher than the borrow paid all the time because there's a compensation is already set up front. You cannot change that. So if you do a lender paid, that's the rate you're going to give them. So to battle and to win loans out there, if they're shopping, then you switch it to borrow pay. Now it's going to give you more room and more flexibility what rate you need to sell it to in order for you to win the deal. So majority or lender paid compensation with Fannie and Fannie Mae conventional, with Rocket it's 2.5. Correct, Juan?
Yes.
Okay. So your compensation is set at 2.5% already. So if you do lender pay, that's the compensation you're going to get, and that's the rate. You cannot go any lower. If you do lower the rate, then the borrower has to pay for that rate. But if you do borrow paid, now it's going to give you a flexibility of going between 1.5 to 2.5, wherever you want the rate to be, in order for you to win that loan.
One more question over here in regards to that, Zach. So you're saying on Rocket, we're at 2.5
That's lender paid.
Outside
It is?
California. Yes.
Yes.
outside of California. Okay, got it. I was going to say. All right, thank you.
Okay. Anyone have any story to share?
Sorry, on the lender paid, I need to understand more. Meaning, if the customer is very sensitive.
Tom, I think you can ask your LOA because we don't have time here. This is the sale call. It's not about lender pay, borrow pay question. So your LOA can explain to you. I'm sorry. Yeah. So we
Okay.
have to move on. We don't have a lot of time. Sorry. Anyone have more thing to share?
Yeah. So on the heels of what, so Kelly, Natalie, I'm going to have you guys hop on here, but just food for thought for everybody. So Thwan shared a scenario this morning with working with a first-time home buyer and then the mother. And if there's anything that you have that's similar like that, like your peers right now, like the experiences that they have had could help you in a situation like that moving forward. So it's really important to take the opportunity to actually share that or ask questions if you've experienced it.
Hey, Kelly.
I was just going to offer, coming from an insurance background, whenever y'all were questioning rates and if they'd actually qualify for that rate or not, if you call for an insurance quote, you can only quote them on the information you've been given. If they say they have a clean driving record and they come in to buy that policy and they have tickets and accidents, the rate gets it's different because the information they gave you was incorrect.
Correct. And that's why we use our system. We email them the rate. It has all the assumption there. And they can click on the button to see the rate in real time, but everything comes with assumption. Anything can change.
That's right.
Yeah. Thank you, Kelly. And Natalie?
Yes. So because I'm new here, when I first talk to a client, a lot of clients they are being difficult. They would be like, I just want to see the rate first without the willingness to provide any document. So what would be your suggestion to be firm in a way that show that we're here for the client to support them? Thank you.
That is a very, very good question. It's all about trust. It's about commitment. They want to have a trust in you before they proceed to fill out the application. or giving you the document. There's a few milestones. The first milestone, they call you, ask for code. Second milestone is have them fill out the application and upload documents to you. The third milestone is the e-sign. Even though e-sign is the intent to proceed, I see those are the milestones that we need to overcome. So that's why the first conversation about code rate, we need to show them that how transparent we are. Here's the rate. And we email them the rate. We tell them to go to our website, check the rate. We need to build trust. And for your scenario, I know that it's always good to do business face to face. So my advice to you, all of you, try to bring the consumer to in front of you. Talk to them. Like Jack said, try to find out their illness, their problem, and try to build relationship. Advise them, give them a lot of good advice. Build the trust so that they agree to fill out the application and upload documents. And then in order to move past the next milestone, you need to communicate with them regularly, like every day. Hey, rate go up, rate go down. Have you find a house? Try to maintain the relationship, build a relationship, and maybe even talk about their family, their personal thing. You have to get them like you. It's very important. It's always the hurdle. And that is why if you are a good loan officer, we have a lot of experience. You know the guideline, you know how to talk, you know how to build the relationship. All of that come together. It's not an easy question and answer how to do it, but it's you. How you handle the clients, who you are, you're good enough, you have the experience, you know how to talk. There's so many things involved. How fast you work, how hard you work for the client, so that they can see that, oh, you are working hard for them. You're not lazy. You help them, you follow up. You're always available for them. Things like that is important. There's no easy answer, but we have to work really hard for this.
Agreed.
Okay.
I know it's a sales meeting. If you have any more questions about how to deal with these clients, you could just reach out to us directly and we'll try to help you out.
Thank you, Benjamin. Okay. So no more thing to share. Then let's move on to the next topic, which is the $1,000 lowest rate guarantee. Marketing already designed 3 images. One is you can announce it now, 3 days to go. And then tomorrow post 2 days to go. Sunday post 1 day to go. And then Monday you post the image, lowest rate, you promote it. And I would, if I were you, pay $5 a day, do a little ads. You can target whoever in your community, people in your zip code, people in this group, wherever you want to target, $5 a day. Target them, let them know. And then email all of your clients, all of your friends, let them know about this promotion. This is the right way to let people know about you, your pricing, your service. It's the right way. And then when you advertise, get the traffic, link it back to your website so that people will come there. And then in the future, let's say a year or 2 from now, you can even target people that visited your website. Let's say for the past 1 year, there are 2,000 people that ever come to your website. You can retarget them. There's a lot of way we can do marketing, but we need to make a lot of noise out there. The company, we are spending money to promote this program right now, every day, until we launch it. After we launch it, we still promote, but we all have to do our own promotion. And the best way to promote is organic promotion. You send it, you share that with people that you know. That's the best way. It's cheap and it's very effective. Anyone have a question about this? And remember, on Monday, we are pushing Mozo to update so that Monday, you can generate the image with your picture and your information on it so that you can promote. So anyone have any question about the program? Hey, Bong, we cannot hear you.
Okay, I'm sorry. So I saw the flyer, but I didn't see that there's a place to put on the domain website.
The domain website?
Like your own website, like that way they can, go to your website. Like the flyer just have the phone number, the name, and the email, but it doesn't have the website.
On the image, there's term and condition. And there's term and condition with the web address. And we will make sure that your URL will show up.
Okay, got it.
You
Thank you.
understand what I mean, right? On the image, we always show the term and condition. the link to that.
Oh, okay. I saw the slide, but I just want to see. I didn't see the website. So, yeah.
Yeah, let's see. Yeah, let me put the URL. Thank you for letting me know. Yeah, okay, I will make sure that we will have the link to your website. And here, I have it here. Let me share the screen. You see this right here, right?
Mm-hmm.
We will show your website URL.
Okay, that one. Okay, I see it. Okay. The one that I saw in the email does not have the, like what you put it up right now.
Yeah, your information will show up, your picture will show up, and your website will show up. Has any more questions for us? Every week, Friday, this time, try to join and please share. We want everyone to share the story. If you don't share, it's only me and Jack and a few others. That's not good. We want everyone to speak up, everyone to involve, everyone to learn. And please take action. Please go out there and please work hard. Make commitment 4 or 5 hours a day. Do a lot of marketing. You will see that your business will pick up for sure. If you promise yourself and be consistent 4 or 5 hours a day minimum, working hard, you will see the result.
Here's what I
Okay.
would suggest for the new loan officers that don't have any business right now or is barely working. Today's Friday. Use tomorrow and Sunday. Go to your local neighborhood open houses. Introduce yourself to those agents. Like, hey, I'm such and such. I'm with Loan Factory, and try to build a relationship with those realtors that are hosting open houses in your neighborhood. So you're not driving around in different neighborhoods. So like, hey, I live out here, and try to see if you could link up with them. Try to see if you could, obviously they're not gonna have that much time to talk to at the open houses, but exchange business card and call them. Let's say if you go there tomorrow on Saturday, 5-10 minutes, come back. Then on Sunday or actually Monday, reach out to them. Hey, it was nice to see you guys at the open house. How did it go? How many buyers did you had walk in? And then that's how you start a conversation. Said, hey, let me know next time you're in this area of hosting open house because I live in this area and I would love to co-host with you. So it's just to get your physical presence out there in your neighborhood to go into open houses. I still do it. I literally, every time I see an open house and when I'm driving, if I'm out to, I just leave my house. I'm like, oh, who's hosting the open house? Let me walk in really quick and introduce myself and see if they have if they're a local agent. If they're a local agent, perfect. I try to create that relationship right away. That's what I would suggest over this weekend.
Thank you, Jack. It's very good. Like I said, we have fear. We fear too much. We fear everything is not good. So try to go out there. By the way, the next All Access event is early June. Harry or Chang, can you announce it to everyone? Whoever want to go, please let Harry know or Chang know. We will go there again next time. I will order more t-shirts and more marketing promotion material to share with everyone. And we'll get better and better. Next time, we try to get better quality material, t-shirt and stuff. But try to attend the webinar, the All Access event in early June. It's a very good event. I recommend everyone to go. It's free. Rocket will pay for airplane and hotel and the food there. They will pay for it, sure. So, okay. Thank you, everyone. Hopefully next week, we hear a lot of good story about the promotion. Lowest rate, 1,000 back. Let's hear a lot of story and we can improve. Maybe Tuesday or Wednesday, we have a meeting to talk about it. Who knows, right? If we see some result, something good to share. But definitely, let's push it out there big. Okay, imagine all of us, 120 of us, go out there and promote it. A lot of people will know about us and come to us. Okay, thank you, everyone. Thank you, everyone.
Thank
Have
you.
a nice weekend. Have a nice
Thank
weekend.
you. Have a nice weekend.
Thank you.
everyone.
Thanks,
Thank you.
everybody.
Thank you. Have a nice weekend.